Hi guys, welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Brand new week, but the global cues are looking subdued this morning. Remember, trade tensions are rising. Trump has said that he will be doubling tariffs on steel and aluminium from the 4th of June. And of course, last week, they've claimed that there is some bit of slowdown in talks between US and China as well. So yes, trade tensions are rising and global markets are clearly reacting to that. US futures are down, Asian markets are mixed. GIFT Nifty hinting at a slightly flattish start for our markets in the negative, although. But of course, lots lined up on the show. We had a positive GDP print as well. It did spring a positive surprise. We'll be taking stock of that on the show. We'll also be taking stock of all the companies that reported numbers over the weekend. We've got auto sales figures also trickling in over the weekend, so autos will be in focus. So lots to discuss over the next 45 minutes or so. But of course, your stock related queries will also be in focus. Keep them coming in on a live feed. We'll try and get them addressed by a technical expert on the show as well. But quickly take a look at the headlines before we move any further. S&P 500 has rallied as much as 6% to clock its best monthly gain since November 2023. Asian markets open mixed amid rising trade tensions. The GIFT Nifty, of course, hinting at a flat to negative start for our markets. Crude oil prices rebound after OPEC Plus sticks to its guns with another big output hike in July. Meanwhile, gold futures are edging higher as the market digests tariff-related developments. Well, May auto sales are largely a mixed bag. M&M continues to outperform peers, but Tata Motors sees a near 10% drop in sales. In the two-wheeler space, TVS Motor registers a 14% growth, while sales for Eicher Motors Royal Enfield climbs 26% vis-a-vis last year. India's GDP data springs a pleasant surprise. Growth in the fourth quarter accelerates to 7.4%, the highest in a year. But FY25 GDP comes in at 6.5%, which is the slowest in 4 years, but in line with government estimates. And US President Donald Trump has announced that import tariffs on steel and aluminium will double to 50% starting 4th of June in what he called a move to protect domestic industry. Well, all right then. On that note, let's first take stock of the positive macroeconomic data that came out on Friday. The fourth quarter GDP data came in at 7.4% vis-a-vis estimates of 6.9%. Although for FY25 it came in at 6.5%, at the slowest pace really since COVID. Since last 4 years. To take stock of the numbers, I'm joined by Bodhisatva Ganguli, who's the group consulting editor at Network 18. Well, Bodhi, lovely having you on the show this morning. As I mentioned, for fourth quarter, the GDP figures were better than expected, but for FY25, growth figure is 6.5%. So is this really the new normal? Because it's the slowest pace in the last 4 years since COVID. How would you really look at the data, and are we really plateauing at that 6 to 6.5% mark when it comes to GDP? Most of the projections were also in that range.
Yeah, right. So Nandita, as you said, the last quarter growth rate, which is 7.4, is actually higher than most consensus estimates. In fact, most consensus estimates were below 7. So that's a positive surprise for the markets. But the issue really is that what happens going forward. See, if you look at the post-COVID period, the growth rate, obviously, 21-22 was a very sharp rebound, and so the growth rate was post 8% in the 3 years after COVID. So this is a slowdown. In some ways, it's a normal slowdown because 2021 there was an absolute contraction in GDP. Question is, as you said, in the current fiscal 25-26, what happens? Right, in 25-26. The growth rate is projected at around 6.5%, which is the kind of consensus estimates. So I think most economists would agree, and I think most of the government officials would agree that the challenge is really to move this growth rate closer to 7%. Now, how does that happen? So if you look at the prints for the fourth quarter, the things which the concern areas is really a lack of pickup in private capex investment. I think that I think continues to remain the case. So unless private capex picks up in a fairly big way, I don't see this. I mean, it'll be difficult to push this growth rate up closer to 7% and even beyond. Because the point is that. So how do we push up private capex investments? I think if you look at some of the schemes which are ongoing, one is, of course, the big theme here is the China plus one strategy. And there, provided, now there are lots of imponderables here, lots of uncertainties. There is, of course, the trade negotiations. But by and large, if you look at, let's say, what's been happening there's, of course, now the announcement by Apple that all the iPhones going to the US, which will be sold in the US, will largely come from India. Now, of course, there was a reaction from President Trump, but that's a positive signal because Apple is an iconic company. But we need many more, or at least several more such announcements for the narrative that the China plus one strategy is really taking hold and is benefiting India. So that's I think one important aspect. Other are the various PLI schemes which the government launched. Yeah. Sorry, you were saying something?
Bodhi, I also want to understand. Yeah, the GDP figures for the fourth quarter at 7.4%. GVA, on the other hand, is at 6.7%. Help us understand, how do you read into this divide?
No, I think that's an arithmetical thing, right? I mean, you have to add indirect taxes to get to move from GVA to GDP. I think that is the fact that indirect taxes going up is itself some kind of a positive thing, because indirect taxes are levied on consumption. The story here has been that urban consumption has actually become a bit weak in the last few quarters. Rural consumption is going up, right? So that's the thing. But I would say that I think that the big picture story is raising the share of manufacturing in GDP, which has been stuck at about 14-15% for the best part of a decade. As I said, China plus one is a positive headwind. PLI schemes is a positive headwind. But we have to see how these boost manufacturing growth and how that translates into private capex. I mean, there's still no sustained evidence that private capex is really picking up. That's happening in some sectors, but not across the board. I mean, I think that's really the concern.
Right. Looking at the data, Bodhi, would it be fair to assume that we can expect a 25 basis point rate cut by the RBI later this week? Because inflation is sub 4% now. Growth, at least. Yeah, sure. Go ahead.
Yeah. No, I completely agree. I think it is. It's always one shouldn't second guess the regulator's action, but I think it would be a great surprise if they don't cut rates by another 25 basis points, because inflation is really now well within the RBI's comfort zone of 2 to 6%. In fact, it's now below 4%. Right, 4% is the median. It's below 4%. So I see no reason why they won't. I think they will cut interest rates by 25 basis points. That I think is a given. If one could put it that way, yeah. Sure. It would be a surprise if they don't. Let's put it this way. RBI is not for liquidity, also. So I think that is that's the thing. But ultimately, private capex has to pick up quite a bit.
Private capex has to pick up, and there is no evidence supporting that there has been a pickup in private capex as well. With that, Bodhi, I'll have to thank you on that note, because we just have about 2 minutes to go for markets to open. So I would like to shift gears and focus in on the market technicals as well. Thanks a lot for taking out time and joining in and putting things into perspective for us. Look forward to our next chat as well. The RBI policies on Friday. Perhaps we can touch base and discuss that as well. But with that, focus in on the market then. We had a second straight week of losses on the Lal Street. Although the May series ended on a good note, the June series has started on a fairly subdued note. We did, end below that 24,800 mark on Friday. But to understand what is the setup like today, given the fact that the GIFT Nifty is hinting at a negative start, and in the pre-open as well, we are in the negative zone at the current juncture. To understand the market technicals, let's bring on board Rajesh Palviya of Axis Securities. Rajesh, lovely to be chatting with you this Monday morning. At least in the pre-open, we are sub 24,700 mark. We've been stuck in a range between 24,700 to 25,000, right? How are you, really reading into the charts this morning? Do you think we are poised to retest 24,600 on the downside?
Good morning, Nandita. So, looking at the near-term setup, the major support is placed at around 24,600, 650 zone, which is the major put-based concentration. Looking at the call concentration, which is placed at 24,900, 25,000 level. So, I think there could be some range-bound activity, especially in Nifty. 950 would be the range for some couple of days. And the broader market is showing strength. So we believe that there could be a breakout on the higher side. So buy on dips would be your strategy. Try to buy near 24,650, 600 zone. That's the important support area. One should keep a stop loss around 24,550 as a to buy Nifty if you get opportunity around those level. On the bank Nifty is looking attractive. The way it is holding above 55,500, I think here we could see good traction on the higher side. Once Bank Nifty crosses above 55,800, rally would be there towards 56,000 to 56,200.
Right. Okay, that's the view, and those are the levels to watch out for. But of course, let's take a look at the first ticks that are coming in. It's a triple-digit cut on the index. In fact, we are very close to slipping below the 24,600 mark as well. A 125-point drop on the index as we speak. The sensex down almost 500 points. Broader end of the markets, the fall is measured over there. Just about a 0.2% kind of a downtick when it comes to the mid-cap index. Advance decline ratio, even Stevens 1:1. 986 advances to 983 decline. So, it is even Stevens. Let's see how things really pan out. But of course, it is a weak start. This Monday morning, and Bank Nifty is also down 0.5%. 55,480 is where it's at. Let's take a look at some of the other sectors then, and how the picture is really unfolding when it comes to other sectors. Most of them are trading in the red, but what's holding out is the FMCG pack. The FMCG sector or NSE FMCG index is up 0.5%. You have PSU banks. Remember, in Friday's session as well, the PSU bank index was upbeat. It rallied somewhere around 3%. There was hectic buying in PSU banking names, and it continues this morning as well. But if you take a look at the laggards and see which is a sector that's being or emerging as the big drag, it's the metal pack, 1.5% down. Remember, there is news flow when it comes to the metal pack, because Donald Trump has said that the import tariffs on steel and aluminium will be doubled from 25% to 50%. From the 4th of June. The likes of Hindalco, Tata Steel get impacted because of that, and which is why I think the metal pack is among the top drags, and IT pack is a close second. 1.5% cut on the IT index as well. So, global facing sectors are clearly witnessing pressure, but domestic sectors, at least the FMCG pack, is witnessing buying at current levels. Auto sector or auto index is down 0.7%. Auto sales are fairly mixed. So, yes, that is also playing out on the auto index. But in terms of the individual movers, then Apollo Hospitals, inline set of numbers, top Nifty gainer, 2% uptick here. HUL, a close second, 1.5% gains here as well. Eternal, that stock is also up 0.5%. Adani Enterprises, Eicher Motors, Nestle India, Bharat Electronics, these are some of the other gainers. On the flip side, no points for guessing. It's the metal stocks that's dominating the laggards list. Tata Steel down 2%, Hindalco almost 2% down, L&T, HCL Tech, JSW Steel, Reliance Industries, Infosys, these are some of the other laggards. Talk about the metal pack, Rajesh, Tata Steel and Hindalco. These stocks are among the top laggards. Of course, negative news flow, but is this a buy on dip opportunity when it comes to these two stocks, or would you wait and watch?
So there is some profit taking is happening in metal stocks from a higher level, but still if we analyze on the near term, short term perspective, most of the metal stocks are trading above to their near term, short term moving averages, and short term breakout is intact on the weekly as well as on the daily chart. So I think after this supply pressure, I think one should try to buy some of the stocks like Tata Steel again, if it's hold above 155 level in this correction. I think again it's a good opportunity to buy this counter in the decline. Even on the Hindalco also, if you get opportunity around 610, it would be again attractive level to buy in the decline. And another stock that from the metal space, that is Jindal Steel and Power. So it's again trading near to 20-day moving average, which is placed at around 930 zone. So if stocks able to absorb all the supply pressure above 930 zone, so I think here also we could see some pullback. So overall, the structure is still weak. Structure is still strong on the short term perspective, but near term profit taking is happening in the counter. I think in decline one should try to buy and accumulate these counter, as we believe that after consolidation, these stocks may again witness good buying interest.
Sure. Okay, buying on dip opportunity when it comes to the likes of Hindalco. Let's talk about Apollo Hospitals. Stock is the top Nifty gainer. Numbers came out and the numbers were fairly in line with estimates. Profits were up almost 60%, revenues up 13% on a year-on-year basis. Margins also came in higher, close to that 14% mark vis-a-vis 12.9% in the same quarter last year. The stock of Apollo Hospital has been fairly quiet over the last 1 month, but since February lows, the stock has staged a very good comeback, 16 to 17% uptick, if I'm not mistaken. How are you looking at this stock? Around that 7,000 mark. Do you expect the stock to resume its uptrend here on, or would you expect it to remain sideways?
I think trend is still on the bullish side for Apollo Hospital. In the recent corrective move, stock has taken the support from its 50-day moving average, and again now stock has moved back above 20-day moving average. So looking at the near-term chart also, there is a strength. On the long-term chart, stock is consolidating. So I think those who are positional trader can buy and accumulate this counter till stock is holding above 68.50 level. I think any minor decline should be used as a buying opportunity. On the higher side, once the stock manages to cross above 71.50 level, I think here also we could see a good traction on the buying side, and there is a possibility that again stock can continue furthermore upside to register a new all-time high trajectory also. But yes, in the decline, one can buy and accumulate this counter. Stop loss should be placed at 68.50.
Okay, buy on declines, that's a strategy on Apollo Hospitals as well. But let's shift focus to some viewer queries that are trickling in this morning then. I want to take up this query on KPIT Tech from Anil. He hasn't really sent in a pointed query, but I was just going through the stock. In the last couple of weeks, the stock has shed somewhere around 5% or so, but in the last 1 month, it has done fairly well, 8% kind of gain there. But how are you looking at this dip that has come by in the last month or so? And what are the next levels to watch out for on this counter if somebody is already holding on to it?
I think, Nandita, for KPIT Tech, stock is consolidating, though stock is witnessing a steep resistance at around 1400 mark. So I think any move above 1400 can take this stock further higher. Because if we analyze on the near-term, short-term perspective, some buying interest has been there at lower level, and stock is now trading about to 20-day, 50-day moving average. So looking at the near-term structure, I think we believe that there could be a chances of breakout above 1400, and once that breakout happens, I think rally can extend further towards 1480, 1500 mark. So keep your stop loss around 1290 to hold the position in KPIT Tech.
Okay, that's the view on KPIT Tech. Hope that answers your query. Let's take up another query then on a Nalco coming in from Yogesh Kumar. He holds shares at the rate of 186 and he wants to, or he's been holding it for the short term. He's kind of making some bit of a loss here at 178 5.5. That's where the stock is. Last 5 sessions haven't been all that great. It has given negative returns. But for the very short term, how would you look at this chart now? He's making a loss. Would you ask him to average, or would you advise him to, kind of stay put right now?
So stock is holding about 20-day moving average. So I think in this corrective move, if stocks able to sustain above 175, then I think he may deploy some trade for buying side to average out their earlier position. And for the new position which he is buying, should keep stop loss of around 171. So I think in pullback there is a chances that stock may again move back to 186, 190 zone, and if any breakout happens above 190, there is a possibility of 200 level also on the higher side. So one can deploy some buy with for averaging out with stop loss of 171.
Okay, that's the view. Hope that answers your query on Nalco. Next query is on a BEML, and Debu K has written in, wants to know your thoughts as to whether or not one should invest at these levels. The stock was on steroids, so to say. In the last 1 month, we've seen a 30% gain. Of late, it has taken some bit of a breather. But at these levels, is the risk reward looking attractive, or would you wait it out, wait for dips? How would you approach this stock?
So very strong run up in last couple of weeks, and looking at the behavior of stock, now stock is consolidating after this sharp rally in last couple of weeks. Looking at near term short term structure, I think if you get any opportunity in cool off towards 4100 would be the attractive level to re-enter in this counter, as near term short term structure is bullish, and I think once stock crosses above 40 to 50, we could see another rally in this counter towards 4400 also. So in decline around 4100, one can buy and accumulate with stop loss of 4050.
Okay, buy on decline. That's the call here as well. Hope that answers your query. Next query from Alex, wants to know your thoughts on Gujarat Pipavav. This is another stock that has seen a very strong uptrend, but it's still almost 1995 points, 1995 rupees away from that 52-week high. Is there more steam on the charts for a Gujarat Pipavav? If yes, is it the right time to buy?
So I think yes, there is a possibility that stock may extend its gain, as looking at the monthly chart, there is a breakout of last 3 month consolidation on a falling trend line. Looking at the strength on the near term chart, there is a breakout on the weekly chart as well as on the daily chart after a consolidation. So we believe that till stock is now holding above 154, there is a possibility that there could be a rally towards 170 to 175 for this stock. So yes, we are bullish for this stock for near term perspective.
Okay, bullish on Gujarat Pipavav from the near term perspective. Hope that answers your query. I had spotted a query on Dixon Tech. This one's coming in from Amit Kumar Srivastav. Wants to know your thoughts. The stock has seen a fair bit of correction in the last 1 month. Even if you look at the last 6-month chart, has given negative returns. 14,725 is where it's at. Seen a sizable correction from its 52-week high of 19,100 odd. Here on Dixon, how is it looking? Do you think it could see more correction?
So some corrective move is happening in this counter, and I think since last 2 weeks there is profit taking happening in this counter. Looking at the near term structure, I think till stock is trading below the 15,000 mark, I think some more pressure we could see. But in the decline, I think if you get opportunity around 14,200, 14,000 kind of level, that would be again attractive level to buy this counter. So wait for further correction in this counter, and then one should review around 1400, 200 level, 14,200 level.
Okay, that's the view on Dixon. Hope that answers your query, Amit. Next one's coming in from Nitin Shaji on a Reliance Power. The kind of breakout move that you've seen on this stock, how would you read into it? And the stock hit a 52-week high. of 60, 65 or thereabouts. Is this just the start of an uptrend?
Yeah, there is a fresh breakout in this counter, and looking at the near-term, short-term structure, I think if its stocks continues to trade above 55 level, there is a possibility that we may see a target towards 65 to 66 for this counter. So yes, one can hold the position with stop loss of 55 in Reliance Power.
Okay, hope that answers your query. There's another query from a stock from the railways pack. This one's coming in on IRCTC from Hussain Poonawala. Wants to know the levels to watch out for with a 1 month perspective.
So some, buying interest was there in most of the railway stocks. IRCTC has also recovered from its recent low, but looking at the near-term structure, now stock is trading near to its important and critical support area of 740, which is a 50-day moving average. So I think if it slips below to 740 level, then we may see further more corrective move. So one needs to keep 740 as a stop loss if you're buying at the current level. On the higher side, the immediate resistance is placed at around 785 zone. If at all stock crosses above 785, then we may see some pullback towards 800 to 820 zone.
Okay, that's about IRCTC. But we spoke about PSU banks and how they've been witnessing hectic buying activity over the last couple of sessions. So there is a query on an SBI from Praveena. She wants to know the target for the long term. Hasn't really mentioned a time horizon. So with the 2 to 3 year perspective, how would you, or what kind of targets should one expect? Also, there is a query on Bank of Maharashtra from Priya Prathab. She bought it for 66, wants to know what should she be doing with her holdings. So your thoughts on these particular counters, SBI and Bank of Maharashtra?
So for near term, we are bullish on SBI. The way stock has managed to give breakout of falling trend line on daily chart. So for near term perspective, we are projecting target towards 870, 880. But for longer period, yes, stock is looking bullish on long term chart also. Some consolidation is happening for long term perspective. So I think once stock crosses above 850 zone, there is a possibility of target towards 950, even 1000 kind of level if the horizon is for next 1 to 2 year kind of time frame. So buy and accumulate would be the strategy. On the downside, 730 should be your stop loss to buy and accumulate for Maharashtra Bank of Maharashtra Bank. I think here also some accumulation is happening at lower level. But looking at the near-term chart, the immediate resistance is placed at around 59 level. So I think if you have bought at lower level, try to book some profit around 59 level.
Okay, that's the view both on SBI and Bank of Maharashtra. Hope that answers your queries. One stock that has been in focus is Embassy Development. The stock has seen a good uptrend in the last 3 weeks. In the last 5 sessions as well, it's up almost 10%. There's a query coming in from Satya CK. Wants to know whether it's a good time for a fresh long and wants to know the target for the next 12 to 15 months.
Nandita, can you repeat me the name of stock? Because
Embassy Development. The stock has seen a good up move in the last 5 sessions. It's quoting at 113.4.
Okay, yeah. Okay, so yes, there is a breakout on the near-term chart. Looking at the breakout, one should keep stop loss of around 106. I think this breakout is suggesting that there could be a chances that stock may extend its gain towards 120 to 124 kind of level. So based on breakout, 124 would be the target. Keep your stop loss around 106 for Embassy.
Okay, that's the view. That's the stop loss that Rajesh has mentioned. I hope you've taken note of that, and I hope that answers your query, Satya. The next query from Naveen wants to know your thoughts on Welspun Corp. I think post results it saw very good traction today. Of course, taking some bit of a breather. But would you advise, getting into this counter at 918? It's close to its 52-week highs, not very far, just about $20 away.
Yeah, almost it's trading at 52-week high, all-time high trajectory also. I think the way stock is continuously showing the uptrend, I think buy on dips should be your strategy. Till stock is trading above 870 zone, I think on the near-term perspective also, we may see good traction towards 980 kind of target on the higher side. So buy and accumulate would be strategy. If you're already bought stock, should keep trailing stop loss of 870 to hold the position.
Okay, that's about Wellspun Corp. Just about a couple of more queries to go before we introduce our next guest. Pankaj Gupta has just written in. He has some shares of Finolex Cables, 260 shares. Wants to know what he should be doing. He hasn't really mentioned his buy price, but Finolex Cables, has seen a good recovery. After a knee-jerk reaction due to competition or increasing competition in the cables and wires segment, the last 1 month, it has gained 14%. Somebody who's already or who has a holding in this particular counter, how would you approach? It would have helped if we would have had the buy price also, but since it's not there, the stock has halved from 52-week highs almost. So here on, what should he do? Should he, buy more after the correction, or should he hang on to whatever he has?
I think he should hold whatever quantity he's having, because still stock trend is also on the weaker side only. Though some recovery has been there from the recent low, but stock is still looking bearish on the short to medium term perspective. I think the way stock is showing some bit of recovery on the near term chart, 1050 would be the next resistance area. So I think that level needs to review again. 1050 would be the steep resistance. So I think at that time again he should review the structure whether it's improving or not.
Okay, that's a view on Finolex. One more query then. This one's coming in from Pooja Khanna. She holds some shares of PNB at 100 rupees. Wants to know the target for the short term. PNB at 100. She's making some bit of profit here. The stock is up today as well, 2.5%. Should she wait for higher levels or look at booking partial profits?
I think most of the PSU banking stocks are showing good traction, and the way PNB has moved up, I think there is a possibility 115, 120 would be the next target for the stock in this up move. So hold the position. Stock managed to be breakout on the near term chart. So I think there is a possibility of 115 to 120 target. Keep your stop loss around 105.
Okay, that's about PNB. Hope that answers your query, Pooja. With that, we've come to the end of the query segment. But Rajesh, before I let you go, your recommendations for our viewers this morning?
So Glenmark is looking attractive from the pharma space, and we believe that the way stock is has shown the recovery from its recent low. I think there is a chances that this stock may extend its gain. 1520, 1530 would be the next target. Keep your stop loss around 1430. Another stock again, SBI is looking promising. So I think for near-term trading perspective, SBI can be looked at. The way most of the PSU banks are showing strength, I think SBI can take lead. 845 to 860 would be the next target. Keep stop loss around 802. And Star is another stock from the pharma space. The way stock managed to be breakout, I think here we are projecting target of 870 to 880. Keep your stop loss around 805 to buy Stride Sashu.
Okay, those are the recommendations coming in from Rajesh. With that, Rajesh would like to thank you for taking out time and joining in this morning. Always a pleasure, and look forward to our next interaction as well. Well, quickly take a look at the market then. By the way, we have slipped below that 24,600 mark. It's a 200-point fall on the index. The sensex is well down almost 700, but the broader end of the markets continue to outperform. We can see a green tick when it comes to the mid cap index. It's holding out in the green. And the breadth is not that bad, and although it is skewed in favor of losers, but it's still at 2:3. So that's how the situation is panning out. June, of course, has started on a subdued note. But on that note, let me bring on board our next guest for today. Joining me is Prakash, Diwan, market expert. Prakash, lovely chatting with you. Domestic cues almost out of the way, in terms of earnings. GDP growth came out, pleasant surprise in terms of fourth quarter numbers. But there, globally, if you look at the scenario, confusing, with the rulings on Trump tariffs. And of course, the threat of doubling tariffs on aluminium and steel imports. So trade tensions are rising, and June hasn't really started on a great note, although May we saw some positive returns. How are you looking at the landscape here on for the market for the short term? Of course, do you think global developments will once again hog the limelight?
I guess so. Good morning. Yeah, I think the global cues are definitely not positive. And this, if you look at all the fronts which seem to have kind of paused for the moment, have come back into a little bit of activity, whether it's Ukraine, Russia, whether it's Chinese IT companies, whether it's tariffs from the US on metals, whether it's bilateral talks. Nothing is kind of getting you in that positive zone, and this happens. Markets certainly were rejoicing a lot of improvement with the EU coming back to normal. And certainly now you have a market where things probably look a bit doubtful. So I would believe markets will give you that opportunity in the short term to buy at lower levels. Don't let FOMO come in the way of tactical allocations. Buy when markets give you that dip, when give you that disappointing day where things are looking bad, and then things look up also at the same time, because fundamentally our GDP numbers, our earnings, which have been announced till now. The RBI rate cut that's probably imminent. These are very positive signs from a medium to long term perspective. But in the short term, global cues is what will provide you the entry point in Indian equities.
Sure, global cues will provide an entry point for the short term. But talk about the doubling of the tariff on steel and aluminium. While India doesn't export a large quantity of steel to the US directly, but Hindalco, company specific, if we talk, did sound off a 40 million quarterly hit to EBITDA from the first quarter of FY26. So with this doubling of tariff, how big a setback would this be, for the likes of Hindalco? And what do you do with the metal universe now? Do you use dips to get into it? Because China, things are probably improving, given the fact that they are taking a lot of measures to boost their economy as well. So is demand going to come from there? Will that be a offsetter? How are you looking at the metal pack?
Yeah, so this is just to kind of corroborate what I said earlier. My comment was that these volatile moves will give you the entry point, and this is a classic example of that. Hindalco will probably it does get impacted for sure, but is the impact big enough for the stock to lose ground? And the answer is not really, because aluminium as a commodity continues to be in great demand. I don't think there are new supplies coming very soon. Hindalco sits on one of the best geographical footprint and supply chains. So, it's got an advantage, it's got leverage, it's got everything going for itself. Just a little bit of that tariff. And this tariff could kind of, get diluted, changed, altered, deferred any moment. So, there's no sense of permanence on the negative action. So my sense is this is exactly what I was saying. You have an example of getting into at lower levels, wait for things to turn around. And even if the impact is there, it's not so large for the stock to kind of react negatively.
Sure. Let's shift focus to autos and two-wheelers as well. Bajaj Auto reported numbers, but there was some bit of a dampener when it comes to external factors like China, announcing curbs on rare earth magnets. That's a key component in EV manufacturing. How big a negative would that be for players like Bajaj Auto?
Oh, it is. It is quite worrisome. The fact that China controls the supply for some of these elements that go into making EV components can disrupt the entire supply distribution of EVs. And the reason why they're trying to do this is EV sales growth is it's a limited market. The faster you kind of cater to it, people don't want to kind of buy things which come much later if something is available off the shelf. And particularly with an eye on Europe, because that's where Europe is where they've actually made some very strong gains as compared to Tesla. BYD started selling more. The smaller cars that are getting imported in Europe are mostly of Chinese origin. So they are making sure that they do not see shortages or price disruptions in rare earths. And that's going to be at the cost of other players. So we will have to find different sources of origin for most of these things. There's not a huge component, but you will have to still kind of get hold of newer supplies. But in the short term, it does impact the supply chain.
Sure. Okay, that's how it will play out for EV manufacturers. But how are you reading into the auto sales figures for the month of May? For instance, Tata Motors, sales here saw a significant 9% drop, and players like M&M are doing much better. But Tata Motors has made a good comeback. There has been good positives in the form of US-UK deal as well. So here on, how would you really look at Tata Motors? Do you think all this in terms of domestic sales, etc., is already in the price?
It is because Tata Motors has gone through a bit of a pause, not just on sales, but even globally JLR had a setback, and these FTAs will probably bring things back to normal. They might not kind of exceed previous volumes, but at least it will kind of get the element of normalcy back. And remember, there's a huge upside in Tata Motors within the domestic commercial vehicle segregation. If that were to happen as a separate business, you will have very interesting metrics coming out of the PV segment of the business. And they have some very interesting launches that are underway. The electric Harrier, for example, it's a great series of vehicles, and this could kind of make them get some market share back. They'll claw back into the market share which they probably lost to Mahindra for some time. But I think Tata Motors is one business you can't write them off so easily with the kind of balance sheet that they are now sitting on, enough strength. So yeah, I mean it's for the value investor, not for some short term stuff, but for the medium to long term. M&M of course is momentum driven, so it'll continue to do that.
Sure. Okay, let's talk about Nykaa as well. Numbers came out. Beauty business continues to do well, but it's a fashion segment that has not really been able to, throw up glamorous, numbers or financials, so to say. The company had earlier spoken of break-even in the fashion business in, EBITDA margin by FY26. But looking at the numbers, do you think that's a tall task?
It is. I don't think it's easy. It's a very competitive market. And I think the company should stick to what it's good at, what's working out for them, whether it's beauty or this, rather than trying to get into this quick commerce and fashion and all. You just don't kind of keep paddling around just to stay afloat. You need to swim. So staying afloat is not what investors want a business to do. It's more of swimming to the shore that you need to kind of see happening, and that's where I think the problem lies. So they will take some time to master their business model, if you like.
Sure. Okay, that's the view on Nykaa. But talking about the earnings season, overall, what according to you have been the clear winners this season, and which is that one pocket you feel that's a big dampener, it was a disappointment, and one should steer clear at least for the next 3 to 6 months?
I wish it was that simple. To be very fair, financials have been very positive. I think the numbers that have come through across the board, whether it's banks, NBFCs, large banks, small banks, private, public, most of them have been very encouraging. And that's exactly why there's so much of expectation building around that. The pockets of disappointment, Nandita, are more to do with, certain businesses like, you have some of these defense names. I don't think the numbers are very encouraging. So you will have to give them time for inventory conversion, for execution and all of that to take off. So I think that's a bit of a disappointment if you ask me, given the high valuation and expectation. But otherwise, by and large, I think the quarter has been fairly positive.
Sure. So you would still not looking at getting into defense names, that means, because post the geopolitical tensions with Pakistan, stocks have seen renewed momentum. But you still wouldn't be looking at buying, right? Because execution remains an issue.
execution remains an issue vis-a-vis the valuation that you're paying. I mean, I don't see any issues otherwise in absolute terms, but you're building in too much of hope and expectation in the price at this moment. So if those things come down, I think that will be very positive.
All right. Okay, that's the word then, Prakash. I'm afraid we'll have to leave it there. But, it was a pleasure chatting with you as always, getting in your thoughts and perspective. And I look forward to our next conversation as well.
Thank you.
Thanks a lot. Well, just take a look at the market then before we say goodbye. Of course, we are down 150 now, close to that 24,600 mark, paired some of the losses. But of course, the story lies in the broader market because the mid-cap index is only gaining strength. It's up almost 0.5%, and advance decline ratio is also getting much better now. In fact, it is skewed in favor of gainers. 1360 advances to 1130 declines. So yes, the market breadth is also improved. So on the headline level, we are looking at pain, but from the broader end of the market perspective, we are looking fairly okay, with breadth also skewed in favor of gainers. In terms of individual movers then, I think it's the, some of these auto names have also, two-wheeler names so to say, have also edged back into the red. Hero Moto, Bajaj Auto, these are the top laggards on the index now, followed by HDFC Bank, Titan, HCL Tech and Reliance Industries. Metal names are also under pressure, but they have managed to pare some of the losses. On the gaining end, you have Apollo Hospitals, clear winner, a 3% gain after inline set of numbers in the fourth quarter. Aside of that, you are seeing some buying interest in names like HUL, M&M, Bharat Electronics, IndusInd Bank. It was on the gaining end last week. So picking up from where it left, Eternal, Adani Enterprises, Nestle and Coal India are some of the other stocks that are doing well in a weakish market. With that, we've completely timed out on this edition of Opening Bell. Thanks a lot for tuning in from me and the entire team. But of course, we'll be back with Closing Bell at 3:30 p.m. So don't forget to tune in for that. Have a great day, and of course, stay with Money Control for all your other news and updates. Thank you.